Over the past few days, I've received messages from clients asking the same question. With everything that's happening in the Middle East right now, what should I be doing with my investments? That's a very normal reaction. When geopolitical tensions rise, whether it's conflict in the Middle East, Russia, Ukraine, or any other major global event, markets can become volatile and investors naturally feel uneasy. But before we react emotionally, it's helpful to take a step back and take the emotion out of the conversation and look at the actual data. This chart shows the performance of the S&P 500 going all the way back to 1928. Along the timeline, you can see that there are many wars, many major wars and geopolitical conflicts that have occurred over the past century. World War II, the Korean War, Vietnam, the Gulf War, Afghanistan, Ukraine, and many others. Now, none of these events were insignificant. They were tragic, disruptive, and at the time created tremendous uncertainty around the world. But from an investment perspective, something very important stands out. Despite all of these conflicts, the long-term trend of stock markets continued upwards. Markets have experienced volatility along the way, of course, sometimes significant volatility, but over time, they've recovered and continue to grow. This second chart looks at something slightly different. It examines how the US stock market performed after major geopolitical shocks. And what we see is actually quite interesting. Sometimes the immediate reaction is negative. For example, events like the attacks on September 11th led to a short-term decline in the markets. But in other cases, the reaction was minimal or even positive. More importantly, when we look at one-year returns after these events, the results are often surprisingly strong. In many cases, markets were higher for those that remained invested. This is one of the key reasons why long-term investors avoid making decisions based purely on headlines. Markets don't like uncertainty in the short term, and that's true, but history shows geopolitical shocks tend to be temporary disruptions, not permanent damage to long-term wealth creation. And this is why successful investing isn't about reacting to every crisis. It's about having a well-constructed, diversified portfolio that's designed to weather periods exactly like this. In our portfolios, for example, we incorporate private investments such as private real estate, private equity, and private debt. These types of investments often have very low correlation to daily market movements, which can help to reduce the overall volatility in the portfolio during uncertain periods. The goal isn't to predict every geopolitical event because no one can do that. The goal is to build a portfolio that can remain resilient through many different market environments. And if history teaches us anything, it's that while crises come and go, disciplined investors who stay invested are rewarded over time. If you're feeling uneasy about the markets right now, that's completely understandable. But rather than reacting emotionally, it's often more productive to review your plan and make sure your portfolio is positioned appropriately for your long-term goals. If you'd like me to take a look at your portfolio and help you to understand where the risks lie, feel free to reach out. You can click on the link below, schedule a review, and I'd be happy to walk through it with you. And as always, stay disciplined, stay diversified, and stay focused on the long term. That's how we help you to live for today while planning for a better tomorrow.